Okay, let's just start with the number because it's staggering. A company that was founded in 2017
Right.
is now commanding a $30.5 billion valuation. I mean, you really have to let that sink in for a second.
It's almost unbelievable.
We are talking about Anduril Industries. And this isn't just a company adapting to change the defense sector. No, they are actively forcing a seismic transformation across the whole landscape.
They're the disruptor.
Exactly.
Yeah.
For any investors out there looking for what's next, this company is the intersection. It's Silicon Valley thinking AI, speed, autonomous systems, taking direct aim at the legacy contractors, the Lockheeds, the Northrop Grummons. This is probably the biggest, highest stakes play we've ever seen where AI meets national defense.
Welcome to DeepResearchGlobal.com podcast.
Great to be here. And for our listeners, for the investors, my goal today is really critical. We have to provide a serious financial and strategic assessment of that valuation.
It's not just hype. No, we have to look past the hype. We're going to surgically examine the competitive intelligence, the full SWOT analysis that my team has put together on Anduril. We're not looking at it as a startup anymore. We're assessing it as a potential major defense prime contractor come 2026. My entire focus will be on what this trajectory and, all the risks that come with it, what that means for your portfolio.
Absolutely. So to set the stage, let's just quickly frame their model because it is so different. It was founded in 2017 by Palmer Luckey.
The Oculus VR guy.
The very same. And what makes them unique, what their whole philosophy is that they just refuse to wait for the government's standard, decade-long process of defining requirements.
Which is famously slow.
Famously. Instead, they use private money, venture capital, billions of it, to fund their own R&D. They build finished high-performance systems that are basically off the shelf, and then they go and sell them to the military. The speed is it's unprecedented. We're talking months, not years.
And that speed, right? That ability to move with what we call venture velocity in a defense world, that's precisely why the valuation has just soared so high so fast. But, speed also brings risk.
A lot of risk.
A lot of it. But before we get to the risk, let's build the foundation. We need to really understand the strengths. This is section 1. The reasons investors have poured, over $6 billion into this vision. When I break down the intrinsic value here, the thing that underpins that $30.5 billion number, the real intellectual property, their competitive moat, it's all about Lattice.
Okay, let me talk about Lattice.
Lattice isn't just a piece of software. It's their proprietary AI-powered operating system. I mean, think of it like a secure, distributed iOS for the battlefield. It's the central nervous system that connects every single platform they build, whether it's in the air, on the ground, or at sea.
And I think for any investor, understanding Lattice is it's non-negotiable. This is their absolute edge. Our own technical analysis shows that the system is built to handle just immense flows of sensor data. We're talking infrared, radar, acoustic, you name it.
All at once.
All at once, in real time, right at the tactical edge. What's so revolutionary is the speed. I mean, traditional command and control, you have a person looking at 5 different screens trying to make sense of it, then give a command. There's a delay. Lattice automates that whole process. It coordinates multiple autonomous assets, drones, robots, with minimal human input. That capability changes the entire speed of a conflict.
It does. And from a financial angle, this software-first model means their hardware is smart, it's networked, and it's always being upgraded, just like your phone gets an update.
Right.
That makes their platform so much more adaptable than the old hardware-first systems that are basically obsolete the day they're delivered. Lattice is the premium. That's what justifies the tech multiple they're getting.
And you can see that advantage reflected in their product portfolio. It's growing incredibly fast, and it's diverse. This isn't a one-trick pony company. They have reach across so many military domains.
Let's run through a few of the key systems. You've got Fury, their AI-powered unmanned fighter jet. It's designed to fly alongside manned aircraft. But maybe the most important one, financially speaking, is Roadrunner. It's this innovative, reusable interceptor for counter-drone operations. And I really want to emphasize that word, reusable, for our investor audience.
Because that's where the entire margin structure changes. It's a game changer. Legacy air defense, it operates on a terrible cost exchange ratio. You might fire a $2 million missile to shoot down a $20,000 drone.
That's not sustainable.
It's completely unsustainable. Roadrunner, because it can be reused, because it can land vertically, it just flips that math on its head.
Yeah.
It turns a consumable into a capital asset. That dramatically lowers the cost per engagement. And with cheap drones everywhere now, that's a massive global market. My team was also really impressed by their push into the maritime space. They've got the Dive LD, which are these extra large autonomous underwater vehicles. And they're also a huge part of the Ghost Shark program with the Australian Navy.
A very high-profile program.
Very. So they're positioning themselves not just in the air and on the ground, but in that critical underwater domain, which is a huge priority for the U.S. and our allies in the Pacific. That kind of domain diversity really helps mitigate market risk.
Okay, so let's get to the proof points. The technology is exciting, but what really justifies evaluation is turning that tech into revenue. And that means winning big, long-term government contracts. Anduril landed a huge one, a $642 million 10-year contract with the U.S. Marine Corps for counter-drone tech.
And the context here is just so important for investors. They won that contract against, what was it, 9 other companies?
9 established competitors, many of them legacy primes.
Exactly. So it's not just a win. That's a huge statement about their technology and their ability to deliver. But even more critical is that the contract is a program of record.
That's the key phrase. For anyone listening, a program of record is the absolute holy grail in defense contracting.
Why is that so crucial?
Because it means it's a guaranteed multi-year funding stream that's baked directly into the military's core budget. It takes away the annual risk of, some committee cutting the funding. It gives investors a predictable long-term revenue stream that you almost never see in a high-growth tech company. It's validation.
And that $642 million deal, that validated the model. But we're seeing more wins that show they have depth. They also got a $159 million contract for the Army's mixed reality helmet systems.
Which plugs the soldier right into the Lattice network.
Exactly. And then another $99.6 million for the Army's next-gen command and control prototype.
Yeah.
The deals are getting bigger and more strategic. They're embedding themselves deeper and deeper.
And all of that brings us back to where we started, the unprecedented investor confidence. The financial path here it's a rocket ship. They've raised over $6.6 billion in private funding, and that $30.5 billion valuation from June 2025, that's more than double what it was just a year before.
Just incredible growth.
My assessment is clear. This kind of exponential growth puts Anduril in the same league as the most valuable private companies in the world. They aren't just trying to compete anymore. They are legitimately positioned to go head-to-head with the likes of General Dynamics once they go public.
But a valuation like that, it demands more than just great code. It demands serious industrial muscle. And they're backing it up with this huge commitment to manufacturing, a project they call Arsenal 1.
This is a huge philosophical shift. It's not just a factory.
Explain that.
Well, the announcement of this 5 million square foot facility in Columbus, Ohio, it's a potential game changer. Think about traditional defense manufacturing. It's low volume, super high cost, almost bespoke. Anduril is trying to flip that entire model on its head.
They're trying to bring a high-volume, cost-effective production model to defense. Something more like what you'd see in the auto industry or with consumer electronics.
Exactly. And from an investor's point of view, that's absolutely critical for their future margins. If they can pull off the Arsenal 1 strategy, and that is a big if we'll get to, they could unlock economies of scale that the legacy players, with all their old infrastructure and contracts, they just can't match. Success here validates the high valuation because it promises real profitability at scale.
And all of this is built on their core software-first methodology. It's not just a buzzword. It really is a different way of doing things.
That's exactly right. The old way, the waterfall model, you spend years building the hardware, then you spend another 5 to 10 years trying to get the software to work on it. The upgrade cycles are a nightmare.
Right.
Anduril just flips it. They do rapid prototyping, continuous software updates, and platform-agnostic deployment. That means Lattice can run on all sorts of hardware, even older systems. They can get feedback from the field and push an update in months, not decades. That agility is a massive tactical advantage, and it's something customers will pay a premium for.
Okay, so we've laid out a really strong case for the bull thesis.
Yeah.
The strengths are, they're phenomenal. But our job is to assess risk. And investing in a company like this, even at this scale, it comes with some profound vulnerabilities. I think we have to start with the biggest one in the defense world, limited operational history.
Precisely. For an investor, this is the biggest qualitative unknown. The tech is exciting, it's winning competitions, but the company is young. Their systems just don't have the decades of proven performance in real, complex combat situations that the traditional contractors have.
That's such a key point. When the military buys, say, an F-16, they're not just buying a plane. They're buying 40 years of data, of refinement, of reliability metrics from hundreds of conflicts. Anduril just doesn't have that data set. If their autonomous systems get deployed in a major war tomorrow, we just don't have the history to know how they'll hold up long term.
And that lack of history is made even more acute by their financial situation right now. They're bringing in a lot of revenue, about $1 billion in 2024, but it's highly concentrated, and they are not yet profitable.
Right.
That's a huge disconnect when you compare their valuation to the traditional profitable primes.
That revenue concentration is the first thing my team flags. That $1 billion is almost all from U.S. government contracts, which means investors are exposed to some very fundamental risks. What happens if defense priorities change? Or a new political administration comes in and changes everything?
Or what if that flagship $642 million contract gets delayed or, God forbid, canceled? Until they really diversify their revenue and, more importantly, start showing consistent profits, that concentration on one politically driven customer is a huge foundational risk that really hangs over the whole valuation.
And that dependence on getting more huge contracts makes the next weakness, what we're calling the scaling hurdle, even more critical. It's one thing to build a few amazing prototypes. It is a completely different challenge to scale that up to massive, reliable, high-quality production across the globe.
And this is where so many innovative defense companies get stuck. They try to make that leap from tech provider to industrial prime, and they fail. There was that McKinsey analysis that pointed out that most defense tech companies eventually just become hardware companies. They run into the same old problems.
So Arsenal 1 is their answer, but it's not a guaranteed success.
Not at all. It's still being built. It's unproven at scale. We're talking about massive supply chain challenges. Maintaining life or death quality control at that volume, sustaining their low-cost promise. If they fail to execute on Arsenal 1, it doesn't just hurt their growth, it shatters the entire premise of their advantage. The stakes are immense.
And to make that scale happen, you need the best people.
Which brings us to another huge challenge, the talent acquisition and retention battles.
The competition for talent in AI and robotics is not just fierce, it's existential. Anduril needs a very specific kind of person, an expert in something like adversarial machine learning, who can also get a security clearance and is willing to work in the defense sector.
There's a very small pool of people.
A very small pool. And they're competing with Google, with Microsoft, with Amazon, who can offer insane compensation and a much less restrictive culture. Winning that war for talent day in and day out is absolutely critical for them to maintain their technological lead with Lattice. Okay, finally, let's talk about the external walls they run into. The regulatory friction. This is where that move fast and break things. Silicon Valley ethos crashes right into the Pentagon and international law.
This is a huge speed bump, especially for their international growth plans. For the investors banking on international sales to diversify their revenue, this is a really crucial point.
What are the specific regulations we're talking about?
I'm talking mainly about U.S. export controls. You have ITAR international traffic and arms regulations and EAR, the Export Administration regulations. Most of Anduril's core systems fall under ITAR, which is extremely restrictive.
So what does that mean in practice?
It means that nearly every international sale requires a long, complex government approval process. It throttles their speed. Selling Roadrunner to a key NATO ally, for example, could take years of paperwork, even if the tech is ready to go today. It's a permanent brake on their global sales velocity, and for growth investors, that's a major limiting factor.
All right, let's shift gears. We've hit the risks hard. Let's talk about the upside, the opportunities, because there are several powerful growth vectors here that could absolutely catalyze this company's growth and justify that valuation.
I agree. And the first, and maybe the biggest, is just the expanding global market dynamics. The whole world is rearming.
The market data is just explosive. The global military robotics market is set to go from about $25 billion in 2025 to over $44 billion by 2034. That's a solid growth rate. But the specific niche Anduril is in AI-enabled network systems. That's growing even faster.
And what's driving it is geopolitical reality. It's China's modernization, it's Russia's actions. Everyone can see the undeniable utility of massed, affordable drones and autonomous systems.
And the money is there. We're seeing budget proposals, like a potential $1 trillion U.S. defense budget for 2026, that are specifically earmarking huge sums for AI and autonomy. Anduril is perfectly positioned to capture that spending.
That budget focus flows right into the next big opportunity. International expansion as a multiplier. The U.S. is the anchor, but the allied market is huge, and it's hungry for modern, off-the-shelf solutions.
And they've been smart about laying the groundwork here. The Ghost Shark program with Australia is a flagship example. They're doing demos in the UK. They have a huge partnership with Rheinmetall for the European market.
I see NATO and our Indo-Pacific allies as a massive near-term growth driver. If they can navigate those ITAR and ear hurdles we talked about, maybe through co-production deals, international sales could rapidly grow and significantly reduce that revenue concentration risk we were worried about.
Beyond just selling more systems, there's also the opportunity in targeting new military domains. The landscape is evolving so fast, it's creating totally new markets where their tech is a perfect fit.
Absolutely. Take space domain awareness. Low Earth orbit is getting crowded and contested. Anduril's AI is perfect for high-speed satellite tracking and space security.
Or what about counter-hypersonic capabilities? Adversaries are building weapons so fast that humans literally can't react in time. Only an AI-powered system can detect and intercept those kinds of threats. That's a direct fit for Lattice.
And then there's the ultimate expression of their system, coordinating massive swarm tactics. The ability to have hundreds, maybe thousands of drones operating as one. That is a paradigm shift in warfare, and it plays directly to Lattice's core strength.
We should also touch on the potential for dual-use commercial applications. It's a smart way to de-risk the business.
Definitely. We're talking about applying their defense tech to other areas. Border security, for instance, protecting critical infrastructure like power grids or ports, even disaster response.
And that serves two purposes for an investor, right? First, it diversifies revenue away from just the Pentagon. But second, it helps them increase their production volumes at Arsenal One.
Exactly. More volume means lower per unit costs, which makes their core defense products even more competitive. It's a virtuous cycle.
And of course, the big liquidity event everyone is watching for. The potential public offering, IPO.
The elephant in the room. Palmer Luckey has talked about it, but the timeline is still up in the air.
The benefits of an IPO are pretty clear. Access to public capital for more R&D, for acquisitions, for global expansion. It would massively increase their credibility.
But most importantly for those early investors, it's the exit. It's the event that allows that $30.5 billion valuation to be realized in the public markets. That's when we'll really see if the market believes the hype.
Okay, now for the final section. The threats. The external headwinds. Because a success story like this, it paints a huge target on your back. And we have to start with the intensifying competition.
The competitive field is heating up fast. I really break it down into 3 tiers that investors need to watch constantly.
What's Tier 1?
Tier 1 is the legacy primes. Lockheed, Northrop, Boeing. They're slow, yes, but they have vast resources, deep government ties, and they are now scrambling to accelerate their own autonomous programs. They will fight tooth and nail to protect their turf.
Tier 2 would be the other startups, right?
Exactly. The neoprimes. Companies like Shield AI, Skydio, they are also agile, well-funded, and going after the exact same contracts. So Anduril is fighting a war on 2 fronts.
And Tier 3?
Tier 3 is the wild card and potentially the most dangerous, the technology giants. Microsoft, Google, Amazon, they have basically unlimited money and deeper AI expertise than anyone. If they decide to seriously re-engage in defense work, they could become an overwhelming competitive force.
The next threat is less about business and more about, well, a global ethical minefield. The issue of lethal autonomous weapon systems, or law of ABS.
This is a huge, unpredictable regulatory threat. There are intense international debates going on right now, especially at the UN about this. The core questions are, they're profound. Who's accountable if an AI makes a mistake in combat? How can an autonomous system follow the complex rules of war?
The central issue seems to be this idea of meaningful human control.
It is, and nobody agrees on what that actually means. Does a human have to approve every shot, or just set the rules of engagement? That ambiguity creates risk. If international regulations tighten, Anduril could be forced into costly redesigns or have their most advanced systems limited in how they can be used.
And even if the ethics are sorted out, there are still inherent technical vulnerabilities. These systems are not invincible.
Not at all, and investors need to track these risks. I'm talking about things like adversarial AI attacks, where an enemy tricks the AI into misidentifying a target, or massive cybersecurity risks, because a connected fleet is a very attractive target.
And then there are the basics, like GPS denial. Jamming is a common tactic. And what about data poisoning?
An insidious risk. If an adversary compromises the data used to train Lattice, the AI could learn malicious behaviors that only show up under the stress of combat. These technical threats are existential for autonomous systems.
We also can't underestimate the power of traditional contractor resistance. The incumbents don't just compete for contracts. They play politics.
And they play it very well. They can lobby for procurement rules that favor them. They can bog Anduril down in costly legal challenges and contract protests. They have the money and the political power to slow Anduril's momentum down significantly.
And finally, there's always the broader external economic and political uncertainty.
Always. Defense budgets can change on a dime with a new administration or a recession. Technology transfer rules can limit those international sales. A recession especially would put immense pressure on the Pentagon to cut spending on new, unproven tech and focus on legacy systems. It's a constant background risk. Okay, so based on all of that, I've come up with a few strategic priorities for Anduril's management as they look towards 2026. Hitting these is absolutely essential if they're going to validate that valuation.
Let's hear them.
First, they have to maintain aggressive R&D investment. The moment Lattice is no longer the best, their premium is gone. Second, the successful execution of Arsenal 1 is non-negotiable. It's their biggest operational test. Failure there would be catastrophic for their cost advantage.
What else?
Third, they must proactively engage with policymakers and ethicists on the losses issue. They need to lead that conversation, not just react to it. And fourth, they need to get their house in order. Prepare their internal governance and reporting for a potential IPO.
To sum it up from my side, I see Anduril riding this perfect wave. You have rising defense spending, geopolitical need, and the AI revolution all converging. Their strengths, Lattice, those big contracts, the funding, they're all very real. They have all the ingredients to become a truly generational defense company.
And my final verdict for our investor audience is this. Anduril is a critical test case. The challenge for them isn't inventing more tech. The challenge now is industrial execution. It's about scaling from an innovative startup into a sustainable, ethical, major defense contractor. How they navigate the scaling, the regulations, and the competition in the next 24 months. That will determine if the $30.5 billion valuation is justified, or if it was just a projection based on promise. Investors need to watch their execution on Arsenal 1 and their international revenue growth very, very closely.
Indeed. It is a very high-stakes bet, but one that could redefine an entire industry, and that alone makes it fascinating to watch. Thank you for listening. Subscribe to deepresearchglobal.com for more latest business news briefs, company analysis, and investment insights.